Hello, everybody. So we had some quite interesting news overnight. MicroStrategy wants to have more authorized shares. These shares are not going to be issued right away. It's more of an administrative vote, but that's likely going to be voted on because Michael Saylor owns about 50% of the shares. So let's get into this entertainment-only, no investment advice video. Before I go into the news, let me just say this. Remember, dilution works differently. It has worked differently for MicroStrategy, and this is tough to understand for a lot of traditional finance. But dilution has worked differently in the case of MicroStrategy and in the case of companies buying Bitcoin via the dilution. It's a different game. The market has reacted differently. Dilution to buy Bitcoin is a whole different animal altogether. That's why if you follow that story, many of us say, well, it's a paradigm shift in finance, in traditional finance. TradFi doesn't understand this because usually dilution means you're going to take on a whole bunch of business risk. You're going to do an acquisition. You're going to invest in marketing, invest in a new product, hire a bunch of people, all sorts of risk. But in the case of dilution with MicroStrategy, that dilution is taking on more Bitcoin risk. The dilution is for Bitcoin. So you dilute to buy Bitcoin right away. As you saw in my video yesterday, right away he buys Bitcoin. So you dilute to buy the Bitcoin. You dilute by taking on Bitcoin risk, not taking on business risk. And so, of course, if you don't like Bitcoin, you think this is the most reckless thing ever. But as we discussed, MicroStrategy, to understand MicroStrategy, you have to first be convinced about Bitcoin. You have to first have high conviction in Bitcoin, in the underlying asset, and then and only then do you start to begin to study the equity and understand the equity. But anybody who hates Bitcoin is never going to understand MicroStrategy. So remember, dilution in the case of MicroStrategy has entirely different market reactions. They announced, like I said, an increase in shares, in authorized shares, of 31x. That's their intention to seek that increase in shares. And the stock is up. The stock is up 1%. This stock doesn't react the same. And I've been following companies from a while, for a while. You take any smaller cap company, any other company that does this, you're going to have so much FUD, and the FUD brings the stock down. And sure enough, there's a lot of FUD on Twitter about this right now. It's pretty insane, yet the stock is up. This stock seems to follow different rules. That's point number one. The stock is up after they've announced that they will seek to increase the number of authorized shares from 330 million to 10,330 million, so a 31% increase. They also announced an increase in the number of preferred shares from 5 million to 1,005 million, which is a 201-time increase here. These, in my view, they will be voted on because Saylor is roughly a 50% owner, depending on the source you look at. Some people say 46, 48%, but this will be voted on. There's enough inside ownership to be voted on. Just my view, right? No financial advice, but my entertainment tells you that this is going to be voted. This is the entertainment I want to say today. Let me move on. What can we learn from this announcement? So let's go through both points. So both points: more authorized shares, more preferred shares. Let me begin with more authorized shares. This is a technical move. This is a technical vote. It doesn't dilute us right away. Right now, I mean, in theory, this would have a big effect on sentiment and market participants, making moves based on the new info. But this is not going to dilute us right away. There's no change today. But this tells us about how Saylor thinks about the future. Saylor sees a future where MicroStrategy needs 31x more authorized shares. That's the future that Saylor is seeing. And why is he seeing that future? Well, if you look, they've implicitly guided here, or implicitly noted, that more at-the-market offerings are going to be coming out. More ATMs, more at-the-market offerings. If you follow the stock, you know they haven't even begun making a dent in the convertible bond plans. They were going to do 21 billion in convertible bonds. They only did 3 billion of that. But out of the 21 billion of ATM, which they had announced this past October, they are almost out. They only have 7 billion left. So depending on how Bitcoin moves, moves within the next few weeks, few months, they could be out of money in 6 weeks. It all depends. It might last much longer if they only do 500 million buys, right? That's going to last maybe 14 weeks, something like that. But if they do multi-billion-dollar buys every week, they're going to be running out of money really quickly. This paves the way for the ability of Saylor to increase the ATM, to add on new ATMs. And it kind of tells you that Saylor, and this is how people have been describing it on Twitter, I agree, Saylor is printing the shares. I use the term minting. He's minting the new shares in order to buy Bitcoin. People kind of, make the parallel as Saylor is printing his own currency, his MicroStrategy currency being the MicroStrategy stock, and then taking that MicroStrategy stock that can be increased at any time and turning it into Bitcoin. I think it's a pretty good analogy. How long will it take for the 10 billion new shares to be issued? I don't know. At a first look, I was going to say between 5 and 10 years. So I'm going to cut it in the middle. Will it take 7 years? 7 years and a half, maybe less, maybe more. I have no idea. Theoretically, if you were able, and this is so theoretical, this is not even funny putting that number out there. It's just theory here. But theoretically, if all the shares were to be gobbled up at $336 a share, 10 billion new shares at 336, that's $3.3 trillion. Now, we have no idea what these new shares will be issued at. What's for sure is that if you issue them all at once, you're not going to get that price. But if you issue them over, say, a 10-year period, then you're much more likely to get the price. That's why for sometimes insiders of stock, they have to sell the stock over very long periods of time, because whenever you sell new stock, you affect the market. Whenever someone does anything with the market, whenever an insider sells the stock, they affect the market themselves. So all of this is very theoretical. The value of a company, the value of a stock is very theoretical, unless you're a smaller player, at which point you can sell it, etc. So that number is very theoretical. It could be 3 trillion. It could be less. It could be much more. It depends on the price of MSTR stock as a result of price to NAV. So that's the multiple. Will we see multiple expansion or compression? Will we get to, say, a price to NAV of 5, or will it go back to a 1.2 or 1.1 or even a 1? And of course, it's a function of the Bitcoin price, right? If Bitcoin goes to $1 million, one can only imagine what the performance of MicroStrategy would do. If Bitcoin goes to 10,000, MicroStrategy likely goes bust. But this is a bet that people who do not believe in MicroStrategy, in Bitcoin, would not take. It's a prerequisite to be a believer in Bitcoin before you even start thinking about MicroStrategy. A prereq is to believe in Bitcoin, right? So, and that's true for the bondholders. That's true for anybody involved with this stock, at least on the upside. If you're a short seller, of course you have to hate Bitcoin, and then that stock may be good for you too. I'm sorry about the rambling. Let me go back to the other point. The other new point in this video, very interesting to me, is the preferred shares. So they had pretty much a meaningless amount of preferred shares at 5 million. Imagine if the preferred shares are issued at like a $10 face value. That would be nothing for MicroStrategy. So it's not enough money, right? So they increased it to 1,005 million possible preferred share. So that made sense. They almost had no preferred share authorized. This tells me that Saylor is potentially thinking about moving beyond convertible bonds. He's thinking about doing other types of bonds, and we knew he was thinking about that. We knew he was going to do regular fixed income. He's done that in the past. He said he could do regular fixed income, but it seems like he's thinking about preferred. By the way, if you're not familiar with preferred, this is a Grok summary about the preferred. One of the big advantages of preferred is that, they don't vote. That's point number one. But of course, the converts don't vote either. But you have a liquidation preference higher up in the capital structure. So you may be subscribed more. You may have more buyers because people say, oh, well, we're higher up in the capital structure. That's good. But no, the main reason why people buy preferred is the fixed income. And so I don't know what Saylor is thinking on that one. He could be doing a new type of preferred that, say, is mostly purchased for the convertible option, and that is not purchased as much for the fixed income. So maybe you could offer a preferred a preferred stock that has a very low fixed income coupon, a very low fixed income rate, but that has an interesting convertible option. So that would be kind of the same as doing the converts, but tapping the preferred market, because you have a lot of investors that can only buy preferred. In fact, a lot of top stocks owned by retirees are preferred stocks index funds and preferred stocks mutual funds. So he wants to find a way to tap into that market and to put a little Bitcoin into that market. And when I say he wouldn't pay a high yield, then I suppose, would he not? I don't know how he could structure that, but I do know that there's this company, YieldMax, MSTY, who makes a whole bunch of fees writing options on MSTR, and they offer this product, which a lot of you in the comment section have commented on this product, where they just generate a yield. I would never be interested in that. That's way too high up in the risk curve for me, and I'm not a dividend person. But some people are dividend people, and so maybe doing a preferred to cater to some of that capital may be a good idea. I don't think he would ever issue a yield this high, but it's something he could potentially do. And one way you could do the yield is what if you have very big convert, we know there's 18 billion left in converts. What if he issues the converts at a negative interest rate? Well, then that negative interest rate that you get, well, you could use it to service the old debt. You could use it to buy more Bitcoin, but you may be able to use it. So let's say you issue $18 billion worth of convert debt at a rate of minus 1%. Well, you could potentially issue 1.8 billion of preferred and move that minus 1% you get on the convert. You move it on a 10-to-1 basis. You move it down to the preferred, and then you end up paying 10% on the preferred, which is just kind of financial engineering, kind of swapping the negative debt from one bond, the converts, and moving it back to a much smaller offering of preferred shares, and we don't know how many converts there would be. So it could be that he's competing with YieldMax on this one. So I have no idea what he's thinking. We'll know more during Q4. We'll know more in the interviews that he makes. He may make more interviews within the coming weeks. We'll know more, but I like the move. I like both moves. And if you love Bitcoin, if you love MicroStrategy, and I think if you understand MicroStrategy, you will see it as a good thing. If you look at it through traditional financial lens, you may look at this in horror and say this is the worst thing you've ever seen. So it all depends on you. Anyways, this channel is not financial advice, not investment advice, just entertainment. I am an entertainer. Hope you were entertained. Please like, please subscribe. Thank you for watching, and have a wonderful, wonderful day.